If you own shares of this stock, you are basically a drug dealer. Hundreds of thousands of people consume your product on a daily basis and they just can't get enough of it. Most of these people can't even function without it. And God forbid if you speak to any one of them before they get their fix in the morning. They will tear you a new one. And what drug is this we're talking about? Starbucks coffee. What's up guys, Johan Lorenzo here. In this channel, we talk about dividend growth investing and a few other strategies that I use to make money in the stock market. If you like the topic of investing and generating passive income, subscribe to the channel and let's get this money, baby. Now, before we get started, as always, all I ask of you guys is to please give this video a big thumbs up and subscribe to the channel if you haven't. Believe it or not, creating content is a lot of hard work and a little thumbs up goes a long way for us smaller YouTubers. So with that said, let's get into it. Coffee has been around for several hundred years and it is the world's most widely consumed drug. Starbucks has been in the coffee business since 1971 and today they have over 34,000 stores worldwide. Starbucks, ticker symbol SBUX, is down 26% year to date. The company has been facing a lot of pressure lately due to supply chain issues, the rise in inflation, and the closing of 100 shops in Russia due to the Russian-Ukraine invasion. Starbucks has been paying and growing their dividend for over 11 years now, and they have an average dividend growth rate of 21% throughout the last 10 years. And a few days ago, they declared a dividend once again of 49 cents per share, which keeps them in line with their previous dividend. They currently have a dividend yield of 2.27%, and the company is fluctuating around the $100 billion market cap. Simply Safe Dividends gives their dividend a safety score of 67, which is still considered safe. They have a current payout ratio of 56%, and their dividend yield is 18% above its 5-year average, which may suggest the company is pretty undervalued. Although we do have inflation at all-time highs, I do think Jerome Powell and the Fed will step in to regulate things. I'm guessing towards the end of 2022, inflation numbers will look a lot better than they do today. When the inflation numbers start to improve, I think Starbucks will easily climb back over that $100 per share range. I mean, how can they not? The company just had some sick first quarter numbers, and yet they're trading at a 30% discount from their all-time highs. Their first quarter revenue for 2022 was over $8 billion, and throughout the entire year in 2021, they generated over $29 billion in revenue. And let's take a look at the share buybacks here. A decreasing share count here is the cherry on top, as what I like to call it. The company is still pretty aggressive with their share buybacks. This alone will bring the share price up because the company is decreasing their overall float of shares in the market. If you own shares of Starbucks, this has a 100% positive effect on your earnings per share. So when looking at Starbucks at the moment, you might ask yourself, Johan, is this stock a good buy right now or what? Well, first, I would like to say, let's look at some of the positive things going for Starbucks real quick. So let's start tallying a few of these positives. 1, they're a big, well-established company. 2, they're growing their revenue. 3, great brand value. 4, they're growing their earnings per share. 5, they pay a growing dividend. And, oh yeah, they're buying back a ton of shares consistently. If you take a look at the industry that Starbucks is currently in, the coffee drug dealing business, right? The coffee business industry. If they're not the top name in that industry, they're definitely up there with the top names in the industry. So this gives them pricing power. They're able to raise the prices on their products and their customers will continue buying their coffee. That's a fact. And for all the Dave Ramsey fanatics out there that are like, well, you know, you shouldn't be spending $5 on a cup of coffee, blah, blah, blah. You need to be more frugal. Listen, dude, we're in 2022. If someone goes and spends $5 on a cup of coffee and this helps them be a more pleasant individual to be around, let that person go spend the $5 and enjoy their coffee. If spending $5 on a cup of coffee is gonna help you enjoy the rest of your day and it's gonna help you be more productive at work, then go spend the $5 on a cup of coffee. What are we talking about? $25 a week? What are you spending? $100 a month? Listen, what we really need to do is increase our income. And that's why we are dividend growth investors. And I like to sell covered call options too, but that's for another video. So come on guys, if spending $5 on a cup of coffee every day is gonna help you be a more productive, happier person to be around, go spend the $5 and be a happy person. It's not worth sacrificing an entire year and being a salty, disgruntled, angry mother to save $1,200 a year. It's not worth it. Let's work on getting your income up and enjoy your $5 cup of coffee. In my opinion, 30% off their all-time highs looks pretty dang good after looking at all the numbers we just talked about. Anything below the $80 range looks like a pretty good buy to me. Again, guys, this is not financial advice. I am not a financial advisor. I'm just letting you guys know what I would do. When comparing their historical averages, anything below $80, I've got to wake up and smell the coffee, baby. I'm grabbing a couple shares. I want to thank you all for watching. I'll catch you on the next one. Peace.